Here's something interesting. Notice how these last three down closing candles on the 5 are the first, um, are 15 minutes in total, and it's the first 15 minute of the 1 hour cycle. So the way this looks is something like this. We come in on the hour, we go down, and we go back up. So these sides up here. So this is kind of like accumulation, manipulation, distribution. And also this leg here is stage one of the market maker buy model because we just got done with the sell model. Strong down closing candle. Candles looks exactly like this. See that? We want to get one stage of distribution. And what we have here is, I would say, one stage of distribution, which is our Judas swing. We open up right here, swing high, then boom, back into terminus of our buy model or sell model. Well, buy model actually. But it doesn't look like it perfectly though, but that's fine. Next thing is stage one and stage two, boom. But this is something we have to take pay more attention to are the hourly intervals and how these candles that are forming in the new hourly interval fit in the narrative with price action. Because if we're starting off in the new hourly interval with manipulation, what comes after manipulation is distribution of our AMD model. So that's check one. Second check is the fact that we are coming from discount and we go into optical trade entry. Let me take off. Hello. Good. Just coming across with new discoveries and price action. Oh man, where do we start? I think we might be looking for shorts. This looks like a strong. Oh, I thought it was. But this right here on the 1 minute, this looks like a market maker sell model. See how that buy side when you got one stage distribution? Similar to what we have here. No, sell, because here it is, sell model. One distribution, come up, bam, bam, bam. And we're in premium of this range here, and we failed. No, I'm looking to sell. Sell, 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 sell. We just left this fair value gap twice. We failed to displace over this fair value gap. We failed to put an hourly body over it. Where is that? Yeah. So still haven't put a body over this yet. Yep, that's one observation. Then we get a nice five counter run coming out of it, and then we run back up, fail to displace this leg. And five counter runs are these price legs are very important. And the fact that we failed to displace over is suspect. Um, come back down to discount. Now we're running back up. And I'm looking on the 1 minute. We get a balanced price range, inverse fair value gap down here within this 5 minute fair value gap. And so this run up, it's strong one distribution. And then my expectation is that we get our market maker sell model maybe in Q4 of this cycle. Also, we are at the highs of it. We're in premium of this green or this whatever color that is, pink. We'll take this off. Yeah, so we'll take this one here. Yep. And we just hit the New York afternoon session open, which is right here. And this is mean threshold of that hourly CIBI or BISI. No, CIBI that we failed to close over. Yeah, so this looks like a pretty good setup for shorts if you ask me. So we'll see. How do we confirm and find an entry? Okay, good question. Well, 10 points is the most we can risk. The obvious thing we can do here is set this entry right here, and then where's 10 points right here. Yeah, I agree. I agree. Um, that too, which by the looks of it, it would be green on the five because we have accumulation, and then we have the strong fair value gap right here, right? And then also, as you observed, we are consolidating, and then we have this low resistance liquidity run here, and then another one here, and then on the higher time frame, on the 4 hour and hour, it's the same thing as well. So the idea about going short is just an idea, but we are at the high of this range here, so maybe we'll come back down to in here, maybe this balanced price range and move up. I don't know. We'll see. Our knowns for shorting, well, one of them is quarterly shift, so Q4 right here. The second would have been a optical trade entry, which we're in the upper quadrant of this little range here. Third would be drawing liquidity. Fourth would be like an AMD setup, a breaker, um, model 2022. Yeah, up here. So these are relative equal highs up here. I would like to see that be taken out as we cross over into Q4. But with that said, this could just be retracement, stage one, and then we continue to come up, take these highs out here, as well as these highs out here. And then we also have untapped drawn liquidity up here from a higher time frame. So maybe going short isn't the best plan. So you're saying that you would want to see price go above it? Okay. So this fair value gap should not act as resistance. It should be inversed because this is. Oh, you're saying that you want to make a trade within this fair value gap. Okay. Okay. Yeah, a few times. So you're saying from your experience, when we wick multiple times in a fair value gap, it's likely that we won't trade through it and that we would reverse. Okay. So that would be our unknown. Hmm. Right. Yeah. It's not worth the risk reward ratio. High resistance liquidity run. Okay. Hmm. I like this AMD setup. This is nice. AMD accumulation, accumulation. There's three parts to it, and then we get distribution. So you mean you can't anticipate it forming? So this is the market maker model. This is the market maker model, except this is a start. This is the start of the market maker model. Accumulation, manipulation, distribution, and then I guess redistribution and second distribution, right? So if we aren't in a displacement, then we're consolidating. And if we're consolidating, then we will expect it could be manipulation or it could just be expansion. But since we have sell side down here, we come and we take that out, and then we distribute going up. And look at what time this is happening between the quarterly shift, between Q2 and Q3. And again, our accountability, yeah. And then we accumulate, manipulate, and distribute, taking out these highs up here. Hmm. SMT, or SMR, Smart Money Reversal. And what is this? Oh, that's the same quarter. Yeah, so these are the highs from lunch. Yeah, lunch highs. Afternoon highs so far. This is morning highs. So we'll see. What do you, what's your question? Huh? Hmm. Yeah. Yeah. Let's look at that. Exactly. I was looking at that one, but it's this one right here. From here to here. And notice how we come to equilibrium of this range, and now we're moving up. So this is stage two. Stage one, stage. Okay. Still hasn't taken out this high here yet. Oh, you think that matters that we didn't close above it? Hmm. I understand you. Yeah. Yep. Yeah, I don't know. Um, hmm I do. I don't want to theorize about it. That's the thing. I haven't paid much attention to this. I just consider a wick above, these former highs as just displacement, or not displacement, but as a stage. Um, Whether or not the body closes over it, I never really thought about that, but I think that's important. So would this be like a weak market maker buy model? I mean, if we can base the strength of the buy model based upon the level of displacement above previous highs, I think that might be valid. I mean, I don't know, but given that we are at the high of this hourly fair value gap, which we have been wicking inside of, this this doesn't show strength. Um, so correlating the two ideas together, I mean, it can justify why we're not getting displacement over these highs. So we'll see. We'll see. This one? Yeah. Yep. Buyers respecting it, or the highs respecting it. I see that. We want to see this broken to justify this over here. We want to see this broken to justify, you know, moving up. Yeah. Or if we want to go down, what do we want to see? Broken or act as support? But let's think about like what PD arrays we would want to see supported or broken to support a bias in either direction. Okay. Okay. hmm Okay. Yeah, define resistance. This right here. Yeah. hmm Three drives pattern. That's what this is. One, two, maybe three. Or maybe three right here. We'll see. Three drives pattern. Uh-huh. Mm. Right. So yeah, I think it's you don't need to see a drawn liquidity with a three drives pattern. After the third one, it'll tank. I think. Is that how you remember it too? Hmm. This entire manipulation like 2.5 at this buy side liquidity 4 up here as well. Interesting. And then we get 2.5. Oh, interesting. And I think this is it because here we get our first retracement at 1, come down because this is the entire manipulation like accumulation, manipulation, distribution. Yeah, you mean these two? Okay. No, that's fine. That's fine. They still work. Looks good. That's a good call. That's a good call. This looks like a low resistance liquidity run to me. hmm Here we have buy side liquidity here. We have this here. And then we also have one up here. So these are our knowns. These are our knowns. We have some stuff way over there, but this is pretty much it from today's range. And then we have a quarterly shift right here, a 90-minute shift right here. It's just 3 p.m. Are you ready to take advantage of this trade? This 5 candle run. This is the fifth. One, two, three, four, five, or this. So we'll see. And these boxes, these blocks are really tight, so changing state of delivery won't take too much time here. All right, so we're going into the first 15 minutes of the 3 hour. In the next 5 minutes, that might be manipulation to the upside, right? And so this is what it might look like. And I'll explain why I think this um some other time. Because I actually over here, yeah, these guys right here. Yeah, that's from yesterday, Wednesday. That's what this is right here. I have this marked out. And then we also have this one as well. This is Tuesday. So are you saying we might break out of this little trend thing here? We could, or we can reject and come down right as we take out these highs up here. This is interesting. But as I was saying, like the first next 15 minutes of the 3 p.m. could be manipulation up and then down like this. It could be something like that, which will give that wick on the candle, just like how we got over here in stage one. This wick right here, this is the first 30 minutes actually. 15 going down, 15 coming up, and then the last 30 minutes was this right here. So this is pretty interesting. Look at this ratio right here. Look at this here. Oh shoot. And we want to take this to right here. This is almost two and a half, 2.5 ratio. One, two. But this is look at this. The wick, the the length of this wick is exactly two standard deviations, and that's the body. So there's always a relationship with the wicks and the bodies of of it. And I've been trying to figure out what that ratio is. See, like how we come to one and then we, reverse. Actually, we start it over here and then we look at it. Look at this four. We go to four exactly. So four standard deviations of this wick is where we hit terminus at. And I see this. I see this all the time and I haven't really cracked the code yet because there's a relationship between the wicks and the bodies. Look at this. This goes to 1.5 exactly. Like what's here at 1.5 of this candle needs to be investigated like this. I bet you are you still there? I bet you think I'm a geek. I'm a geek, right? This is what? 1.5. I mean, yeah, like the simple math, the advanced math. I don't know. I kind of lost my interest in it. It just got different. School got different. But anyways, this is it right here. This is 1.5, and 1.5 is where we can expect a reversal, right? Um, and what's interesting is it's almost the size of this manipulation leg right here. Is that a coincidence? But here's 1.5 here. This is almost the low, this fair value gap. I don't know. I don't know. But let's say that this information over here wasn't provided, hasn't been provided yet. And all we do have is our knowns, which is the first 15 went up and then the next 15 went down. And then we measure that to see where the next 30 minutes will be. And that comes to 1.5. Yeah, one, two, three, four. Oh, man, that's awesome, right? So I don't know what to call this wick body relationship, like wick body relationship. That's gonna be my thesis. I have a theory on this. I've been working on it for a while now. Yeah, I'll show you. Where's it? Where's it? This here. This is it here. Taking a new day opening gap, close, and an evening high. New day opening gap, close, in the open. Asia above high close, evening high, midnight open, below close. So I would take like, I'll use this as my anchor and I'll measure from the new day opening gap close to these, the high in Asia, the evening high, the midnight open, close, or the New York open, those specific times. So from new day opening gap open to the New York open, I'll take that and I'll project it in whichever direction it's in. And I'll do that for these other variables here. And one thing I found interesting was the standard deviations that were in confluence with each other, like specific standard deviations were in confluence with each other. And it looks something like this, here. Oh yeah? All right, hold on a second. Looks like this. So this negative 4408. That's just the price. Doesn't mean it's not necessarily negative. That was 100 standard deviation. I'm trying to remember what this is about. It's 4398. Was that 61.08? Yeah, I don't remember. I don't remember what this one was for, but I found different commonalities and patterns to this. So, but the bottom line is there was different like the close. I think for this I was looking at the close because I don't know. I forget. I forget. Yeah, yeah. I had some videos on. I gotta rewatch them. Here's our Yeah. Here's our quarterly shift right here. Here's our. We're about to close. Are you gonna take this? We had a 5 minute change in state of delivery. We probably would get like optical trade entry right here for uh uh yeah, up here maybe. And then let's look at, yeah, about the same. Almost coming to 2.5 here. I'll just get rid of this. And then we have our sell side liquidity here, which are our former distribution stages on the buy model. All right, I'm about to get in. Jump. I jumped in. Yeah. Oh, I'm doing something like this. Definitely coming for these highs, but I want to go for these lows down here. I'm selling. I'm selling. Selling. I want to short this optical trade entry right here. No, you can. You still have some room, I think. Well, maybe we can get the second stage distribution, which would be into a fair value gap. That would be a silver bullet. We want to see this be broken, violated. If this isn't broken, violated access support, then we want to see maybe return its optical trade entry of this price like here. But other than that, this fair value gap right here should hold. We have a volume imbalance, which we can very well run into, then come down. But let's see if this fair value gap is going to be the winner. Yeah, because on the 1 minute, we're just consolidating in between this range here. Nice, we come to 3.5 of this change of state of delivery. Oh, this is 4 standard deviations. This is perfect. And I think this is the New York Open. Yeah, New York afternoon session. Ooh, maybe I should have gone short. These are acting as support. On the 5, we have this change of state of delivery. Yeah, I am. I am. So it's a good thing I didn't get in down here. Neither did you. To have a trailing stop loss. Stage one, stage two. Could this be stage two on the 5? Distribution. You think it is? So you expect a move up. Okay. If we expect a move up, I need to see something down here in discount to support that. We'll just jump out. So changing the bias. So we might need to see this sell side liquidity down here get taken out one more time. Stage one, stage two, boom. Let's see. 2.5, perfect. Let's see if we can continue to take out this fair value gap right here. But this is how it would work if we were to go long. So no, look like something like this. We want to take out these highs here, 12 points. But again, we're expecting a higher time frame move, so we're gonna move up higher. If we do, because we could come down here to 4 standard deviation. I think that's what we're gonna do. Yep. Ah man. Yeah, so the initial bias was correct to be bearish. Oh, you know what else we did not include in this analysis? We did not include the fact that we were in premium, which, yeah, so this was correct. To jump out to going for a long position in premium, right. And then the other thing is we took these out, we took this out. That's drawn liquidity, 5 minute change in state of deliveries right here. But okay, I don't know how many points that was. I think it was like, NQM. Oh shit. I made the same mistake too. It was supposed to be the minis. I don't know why the mini disappeared on me. Hold on, let me see something. MNQ. I traded a mini. Yeah. Um, Let me clear this up. I think I'm distracting myself. Took this out. We have that there. That's what I was aiming for. I said that's what I was aiming for. I was aiming for, yeah, initially down here, 10 points stop loss, something like this. So would have been like 30 points, give or take. But you said on the five, we're in discount, and there's fair value gap, and this was a low resistance liquidity run too. The 1 minute, yeah, down here, yeah, we are, yeah, we are. You're good at that. You're good at that. I'm still learning how to do that. Yeah, damn. So it's easy to get 100 points in a day. But we took three trades today. We took this trade. This trade, if it comes here, will be 34. Right now it's at 20. The one we took, the one I took during lunch, which I wanted to talk to you about why I took that. That was an option play. Um, that one was about 50. And then the one that we took for that short today, So what is the market straight shift right here? What is the market telling us right here? Yeah. No, this. I mean, are we? What's the break in order, break in structure, whatever it's called? What's the next? Why? But is it okay? So let's say it's a reversal. Where would you get out at if you were to take it? Right here. So would you be willing to go 6 points into drawdown to stay in this trade as a short? Okay, let's say that we're still in here and price came down and we're thinking, oh, it's gonna reverse, which price didn't reverse. Uh, let's say it does reverse, which it's allowed to do. Where would we expect it to reverse to is the question, and we are currently right here. And you're telling me if you weren't on the call, you would want to get out here because this is a bearish order block. So what I'm saying, which one? This one? So the green one will be this one. So this is 10 points. And the question is, would you be willing to go and draw down by 10 points? No, no, not. I'm sorry. Would you be willing to give back 10 points to stay in this trade to get to your target down here? Right now, you're up 16 points. It would, it, so it would be a 10-point retracement. So if you got out, okay, if you got out and it retraced on you, would you be convinced to go long or would you be still adamant to go short? So you're saying if we go up, hit this order block, or this one here? Mhm. Yeah. hmm Let's look at the 15. We know we're in premium. We took out previous session liquidity. We did that already. So this is why I was, bearish. And this is why I was saying if we were to come up here, would you be willing to give back 10 points to get a full 34? And let's say we were still bearish, right? And we wanted to get in, or we missed getting in up here. When do we get in next? That would be on the retracement, which would kind of be this here. Or we could come all the way up here. Oh, really? We're supposed to remain. We can't go into a premium. Where did you hear that? Where'd you hear that at? I want to hear his justification for that because I think different about that. Displacement, expansion. Okay, okay, okay. Yeah, 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 yeah. Yeah. Okay. I'm still here. No, but if you can write down what you think on paper or type it up, we can no, what we can do is we can create a process out of it. Because the process that you follow to run your system, well, it's gonna be a part of the system. It has to be created by you, and the way that you articulated what you think is gonna happen is the way that your process should be structured. You get me? Yeah. You're talking about in discount, this Bissy, right? So this is where Bulls and Bears come in. This is a game I play. It's a very fun game. Who's in charge right now? Bulls. No, 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 Bulls because this bullish PD array down here is supported. So now we're going up, and then Bears are here. This is our Bears, and they're in premium. So currently we're stuck in between two ranges. Um, Bulls and Bears. Who's in charge? Green Bulls, we're going up. Red Bears, we're going down. And we have a 5 minute change state delivery right here. This could be our entry. This could take us down to paradise down here. So let's get ready. Ooh, optical trade entry too. Let's go down to the lower time frame, see what's going on. What is it? Why can't you log into TradingView? Yeah, I would do that instead. So, yeah, what is it? 242? No, we didn't take that today. We came No, we didn't take that today. That's previous day high. We haven't taken that yet. Nah, the high for today is this one right here. 39, 239. Look, my target's almost there. Look where we came to here on this fair value gap. Boom, by supporting. We're coming down. Record for these lows down here. Now, would you get in for a short? What? Right, exactly. So we don't go in there for shorts. We're not gonna do that. Your FOMO isn't that bad, is it? You don't have that bad FOMO. Your FOMO isn't that bad, is it? You got FOMO. That's how I felt. This is a call option right here. This is a long optical trade entry inside this fair value gap. That's how I felt too before I joined the group. Nah, that's not gonna happen. No. Is this a high? Yeah, it is. Is this a high probability trade? No. I'm not even gonna press the button in my account. I'm not even gonna waste a few dollars for this. I'm not one, two, three, four, five count of run. Bullish for the block here. I'm taking it along here in demo. So I'm getting out of my short position to reverse. Thank you. Thank you. Thank you. I don't I don't know what it looks like. I don't know what turtle soup is. Mm, 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 mm-hmm. This one? Oh, this one? Yeah. So, Oh, that matters. That's what the total soup is. I never knew. So you saying that does the body have to close below this candle's bodies? The way. So can you rely on this then a 5 minute change instead of delivery? So where do you short? Where do you get in for the short here? So you look for like a setup, like this retracement back up here. Hmm. Oh, here it is. Here it is right here. SMT. See that SMT? Hello? Yeah, you talking to me? Oh, I thought you were on the phone. Oh, my bad. I thought you were on the phone. Oh God. Okay, okay, okay. Do you see this breaker? Low, high, lower, low. Inside of all this stuff that we're identifying, drawn liquidity, market structure shift here. Model 2022 maybe come down right in here. Take that as a trade. Oh, okay. So your friend, you told him about ICT. I think we're going to the New York AM or New York afternoon session. So I'm gonna put my stop loss right here. Or my take profit right there. What'd you say? Yeah. You stopped trading at 337. Wait, what is the power hour? I heard people talk about that. What is that about? Like wild stuff can happen. Like in the next. Oh, so in the last 35 or 45 minutes or last 15. But like ICT said between 315 and 345, that's like a macro. We should see something. And 345 is right here. We're coming up. And I think we're gonna go up. Come on, come on, come on. I want to short up here. Ooh, 225, 2.5 reversal. Come on, get there. Get there. Yeah, it's the same person. Wow, what's up? I'm Jamaican. I'm Jamaican. Well, you in the right state for that. Let's see this holds. State, state. I said state. Oh, boom. We're not going back up. So I would have gotten out because too late. I didn't move my stop loss because and this this is now we go long here. And I was supposed to put my stop loss here, but I got juxed. But this is it. This is it now. This is where we go long. Right here. We're going for those highs from yesterday. We're going for yesterday's highs. Right here. Boom. I could. Shit. Let's see. I'll put a marker on it if it makes sense. Let me look at the 15. Let's see what we get here. Four, four, perfect. Boom. That looks good. Why not? But you have to be ready. Well, this counts then. This counts. This counts for me. This counts for me. 10 points right there. Stop loss. Stop loss, 10 points. Here's 30. Let's try for 30. If this works, I gotta explain why. If it doesn't work, I have to explain why. Well, 5 minute bull short block. Let's see how these last couple of minutes pan out. We did run into this fair value gap here where bears are, and then we are back down here where our bulls are, our bully bulls, the Bulls, Chicago Bulls. You know what's interesting about the city of Chicago? We have a bunch of professional sports teams. One of them is called the Chicago Bears. It's a football team, and the other is called the Chicago Bulls. It's a basketball team. It's the same team Michael Jordan played on. So CME, Chicago Mercantile Exchange, is where futures are sold and bought. And we know that if you are bullish, you mean you want the market to go up. So that's the Chicago Bulls. And if you're bearish, you want the market to go down. And that's the Chicago Bears. What a coincidence. They're largest in the country after New York and California. Although New York City is not a city, it's a conglomerate of counties. New York City is ginormous. And they came together after the Chicago World Fair. They were like, we got to put New York back on the map. That's when Edison he revealed his light bulb to the world. Like that's what the Chicago Fair was about. Have you been to Chicago before? Your husband doesn't like to travel. Yeah. Bum, bum. Looks like the Bulls lost. The Bulls lost. Bum, bum. I didn't I didn't take the trade. No, I said this is demo. I told you this trading over here isn't worth the few amount of points that I can scrap off with a micro in these conditions. And I said I'm just gonna trade in my demo account. I didn't trade in my real account. Yeah, you do. You do. And then the thing is I'm trading to be right, which I shouldn't be. I should be trading to collect information. So I'm really trading to practice the process that we're forming when we are in a trade, when we have to manage it. I'm just not convinced that that's all there is to turtle soup. It sounds very reckless. Okay, you might turn me into a believer. Oh, look at this. Look what I had here. You see that? Boom, boom. Guess what else we have? Model 14 right here. See, I told you we would go up first. I don't know how many minutes this is here, but here, let's look. What great what trade? Yep, yep. Thank you. Yep. Congratulations. Hey man, you know, you know, you know what the difference between $300,000 and $300,000? There isn't, because they're both made up of $300,000. So why should it matter how quickly those $300,000 are accumulated. It's just gonna be the same $300,000. So it's that to say we're green on the day and we just made a few $100, which which will be which will, I'm I'm diluting the importance of the amount of money that was made by saying that this $300,000 is just $300,000 or $300,000. It's really nothing to be so excited about. It does. It does. Look at this. 2.5. Boom. And like this is like every projection, every PD array, it appears to be holding and it fails, and appears to be holding and it fails, and are we going up or down, up and down? Like like you said, these conditions right here, we're still stuck within this range from here to here, by the way. This is famine. This is not good. Yeah, building sentiment. Yeah, this is when you get out the market. You stay out the market. This is gambling at this point right here. Wait, you were trading during Asia in London? Yeah, yeah, you're gonna catch a move like that. I hear you. Look at this. I wanted to show this to you. I guess this is what ICT calls reading and say. We have inverse fair value gap here. Run up, fail, fail, boom. So this is premium. Now we go to discount. These lows down here into this fair value gap here in discount. Inside of this huge 1 minute change of state delivery, 5 minute order block. And then we hit, boom, run up. Now we come for external range. We don't quite get there. Then we come down, take out the sell side here, back into this fair value gap. And then we get a run up, taking out this high here, this here, back into this fair value gap. Then we run down to what? This 1 minute chain instead of delivery, this bullish order block. This is key, especially after we get a strong displacement candle. This is key. And then what happens? Boom, we take off. After we hit this bullish order block, and why is this bullish order block important? Because we took out sell side here, which is lined up with this fair value gap. And hmm, kind of interesting how we almost get up to two standard deviation of this over here. Quite interesting. One, two, three, four, five. I know this is six, so five. Then we run up, then we retrace or we reverse at Q4, 90-minute cycle, or no, Q4 micro. So when I came in, I saw this. I'm like, why did we reverse? I'm like, let's look at what happened. Is this a market maker model? I mean, this isn't the cleanest one, but we do have higher lows here. Okay, so where did it start? Started here. We have a low, high, lower low. This is a bullish order block or bullish breaker. Do we displace above it? Is it strong? No, it isn't. So we lag pretty deep within the order with the breaker. But it starts the first run. Here's the second run, which we failed to come over here. And then it goes down. So that's why I was pointing all that out to you. Low, high, lower low, run up. Yeah, here it is. This low here, go to this high here, swing high, down here, yeah. Between the last two in this case, yellow or green candles. And then we have to displace, we have to take out this side here, which we do. Then we come down. Usually we should come down here if it's strong and move up, but we come way down here. Body's respected, but we wick through it. That shows that it's weak. It's showing that it's weak. And then we run up. So we have, look, we have bullish sentiment before a reversal, right? We have bullish sentiment all the way to the high of the day. In order for, what do you mean? Yeah, this here, yeah, it's a manipulation. And that's why I call it five counter run because it usually is manipulation. Um, went down. Okay. Uh, yeah, let me get this out the way. The other thing is someone could have saw this and gone in for a call. They would have been right, but given how weak this is and where we are in the day, this is a telltale sign that we're just showing a bullish signature so we can enter into an aggressive sell model, which we get here. Sell to buy. Going up to go down. Be kind of like right here. Four goes all the way down here. We go to 1.5, get our reversal. Look at that. Boom. Boom. There we go. It's really a retracement. It's really a retracement. But yeah, it's just, yes. I mean, I see it as a retracement because we don't displace above these highs up here, right? Yeah. Now we're just consolidating. Yeah. So look at this here. Look at this here. We come down, run up, down. Stage two is right here. Here's our silver bullet entry right here. This is also stage two. And this goes to your point about expansion legs, how they should stay open. Here, stage two is right here. Then here we got our accumulation, manipulation, distribution right here, AMD. Yeah, this is what I need to do better about. Right here, this one. Yeah, we take this out, right into this fair bullish order block, fair value gap. And so after this was created, let me do this one here. If we just take the green up, green closing bodies or whatever, after that was created, we can do this and look to the left and see, okay, we have fair value gap, bullish for the block at 2.5. Okay, this is a good target. To 2.5, fair value gap at the high of this. So this would be my next target right here. And maybe this the slowdown here. And for standard deviation, yeah, this could be our next target right here. So, okay, but where would you take one off? You take one off here? Will this be your first take profit right here? Yeah, so that's what we did here. So we would take one off like right here. But but here we have a silver bullet entry, and this is what could be tricky. It's though we have a retracement, this is our silver bullet entry. Why are we taking anything off knowing that we should be adding right here and then go down? Yeah, I don't know. As far as entering goes, seeing this here, I don't know. This could be a turtle soup. I don't know. Maybe after we take this out here, run up. I don't know. Maybe this might be the entry. Yeah. Yeah, and I want to see this hold here. If that doesn't hold, so we can't take off here because that's just way too close. Doesn't It's not worth any. Oh, this is 20 points though. It's not bad. But 1.5 also could be an area we can come off. This is 26 points. And then 2 where we end up going, this is 36 points. So this is not a bad trade. But the question is like, how did I see it? Like, how do we see it? And you said it this morning that we can consolidate in this fair value gap because we had a lot of wicks in it. And I'm like, that's valid. And what do we get out of consolidation? We get reversal or expansion. In this case, we got our reversal. Yeah. So you were correct. You were right. And then I'm pointing this out to you. Here's our breaker, low, high, lower, low. Okay, this is starting. Market starting to do something. Come down. Now we come up here. Then we can just project this last OB here. Boom. Where do we go to? 2.5. Oh, wait. Seriously? Is that almost two? It's just wow. Okay. I think we should be going short here. Yeah. And then boom, you can get in right here, or we can go on the 15 second. Wait, how am I making you laugh? Wait, what's so funny? Yeah, look at this. Look at these projections. 3.54. But what's so funny? Oh, 2 point negative two. Look how we have. Here's our smart money reversal right here. And then down here we hit our these order blocks, these order blocks, these order blocks. So this is at here, this is the time that this is at. Do you know where I get these colors from? Uh, you know, that man is the only person that has been able to change millions of people's trading view colors. Look, this is SMCs right here. Boom, SMC. Here's your confirmation. Boom, SMC. I have to be better about SMCs. Look at it. Here it is right here. Going into Q4 reversal. Yeah, but that's it for the education for the day. I'm gonna I'm going to cut the recording and then set you up and then yeah, I'm gonna be human for the rest of the day. And there's a basketball game on too, so